Here's what you should do if you've got $10,000 in savings. Hello and welcome back to my office. It's actually a bird's eye view of the best use of your money. My name's Jonah, and this video is all about the best ways, what you should do with $10,000. Now, full disclosure, I didn't come up with this topic on my own. I actually saw this topic a few days ago in an ad on my phone. That's right, I'm scrolling TikTok or I'm scrolling Instagram or Facebook and boom, the ad says, here's what you should do if you have $10,000 in saving. So naturally, being a student of everything finance and teaching thousands of people at this point exactly how to maximize their cash flow, create cash flow, save money, spend money the right way, I was intrigued to say the least. So in this video, I'm going to tell you exactly what the ad told me. And then I'm going to rate their approach based on the knowledge that you and I both know to be true about that recommendation. And I'll tell you what I would do if the situation calls for it. But let's start with what they want you to do. And when I say they, I'm talking about Investopedia in this instance. The ad that I saw was sponsored by that site. Now, generally speaking, I like Investopedia. I found that most of the information on their site is good. I have found some information that's been incorrect, but 9 times out of 10 so far anyway, I can get behind what they're explaining. I've never, up to this point, seen Investopedia give an article where they're suggesting something until today. Normally just used it for some definitions of some financial terms. And boy, let me tell you what they said. The first thing that they said, and there's 5 that we're going to talk about today, they said these are 5 wise and safe ways that you should use your money if you've got $10,000 in savings. So the first thing that I want you to do is think about what they said, and we'll take a dive in here and see if you agree. They have 5, and the first one is that you should immediately increase the contribution into your 401k. And boy, do I have problems with this, and here's why. I truly believe that if the average person understood what was happening when they put their money into a 401k, they would immediately stop their contribution. And here's what I mean. If I asked you what's worth more, $1 today or $1 20 years from now, I'd assume you'd tell me $1 today. And if you're not answering that way, I'll just kindly remind you how many candy bars your parents could buy with $1 growing up, and how $1 now probably gets you like a fun size or a mini candy bar. It's definitely not getting you a candy bar at checkout, right? What about this question? Are taxes going up or down? And you may feel like one over the other, but let's be real. I'm not a politician and I don't predict the future, and you're probably not either. But I guess you're probably thinking that they're actually going up. And even if you don't agree that taxes are not going up, that's fine. Can you agree that we're actually taxed on more and more things, different categories, as time goes on? Okay, what about this one? If you have a choice, would you rather pay taxes on the seed or pay taxes on the harvest? Anyone thinking about that question for more than 5 seconds is going to say, if I have to pay taxes, then I'd rather pay them on the seed, the small amount, than the harvest, the big amount. Great. Think about those 3 answers to those questions I just asked and remind yourself that you're actually breaking all 3 of your own answers by contributing into government-sponsored plans like 401ks. I'll explain. You're giving up good, stronger dollars today, to be paid back with future, weaker dollars. The tax is always going to be there. And since you're not in control, they can change the categories or change the ways in which that money is taxed. And I bet most of you watching this video actually believe that taxes are probably going to go up anyway. And you're hoping and praying that your money now, seed, becomes a harvest, just to pay tax then on that harvest when it happens. So if I've said it once, I've said it 100 times. I truly believe that if the average person understood what was happening when they put their money into a 401k, they would stop contributions immediately. The second thing they said to do is open an IRA. Didn't we just talk about that above? It's just another government-sponsored plan by a different name. Let me explain how the traditional IRA works. They claim you can write off contribution on your taxes each year, but your withdrawals are taxed during retirement. That's the literal example of locking up good money today, hopefully getting it back in retirement. And I say hopefully on purpose because your money is not guaranteed. Your contributions are not guaranteed. You can lose everything you put into that account. And I know some of you are saying, but Jonah, I get a match. And my 2 cents there is if your principal isn't guaranteed, then your match surely isn't guaranteed either. You're paying taxes, and then you're paying taxes on the potential harvest later on down the road when you're retired with less deductions all around. Because isn't that what happens when you get older? Think for a moment. Anyway, let's keep moving. The third thing they suggest is starting a 529, which is a college savings plan for your children or grandchildren. Folks, please listen. Don't do that. Tell me what happens to those $529 if your child or grandchild decide not to go to college. Did you know that there are withdrawal limits on that money as well? 529 plans only allow you to use up to $10,000 a year at public, private, or religious schools, K through 12. So what if you put all the money for school into the plan, but then you need $12,000 or $15,000 for school, but you can only get out 10 without penalty? Don't get me really started on penalty either. You put the money in there. It was yours. You earned it. You don't have to contribute to the plan. You chose to do it. And then there's a penalty to get the money out? Stop it. Number 4, they said pay down your mortgage. Again, at least we're getting some better options than the government-sponsored plans. But this one still isn't something I would normally suggest. Now, if you're into YouTube, reading, financial gurus, you'll realize that this topic is really split almost right down the middle. Some folks say, never pay off your house. Others say, pay it off as fast as you can. If you want my take on it, I'll save it for a different video. But here's my 2 cents on what this ad told me. If you pay $10,000 toward your house, did you free up any cash flow? Did you create any cash flow? Did your mortgage payment change? Did your quality of life get any better? Do you have more time with your family, more resources for a vacation or trip? The last thing they suggest is paying down debt. It's the best suggestion of the 5, in my opinion. Not ideal, but it's the best of the 5 that they're offering, okay, or they're suggesting. I'm going to read you exactly what it says about paying down the debt, okay? Using some of your $10,000 in savings to pay off high interest or other loan debt is usually the best first step. I'm wondering why they put it at 5, if that's what they're saying, but okay. They say that's because the high interest rates charged on most credit cards and consumer loans mean you're effectively losing money. That is, the money you'd make investing the $10,000 in savings into an investment account or savings account would be less than the interest charged on your debt. That's what they say. I want to raise you this option or this question. Wouldn't the same be true if you left your debt alone, but then took the $10,000 and put that money into maybe a private money deal, a private lending deal, where you can make more interest than the debt was charging you? That's what they're saying. They're saying you should pay off your debt because it's charging you so much in interest, you'll never make that interest in an investment or savings vehicle. But what if you knew of a vehicle where you could make that much interest, or would it still make sense to pay off the debt then? I just want to get your brain thinking and working just a little now that we've dissected and walked through all that Investopedia has told us we should do first if we get $10,000 or have $10,000 in our savings account. Let me finish this video by telling you what I would do with $10,000. So if you're watching the video and you've got that type of money burning a hole in your bank account, burning a hole in those investment accounts maybe, when you're realizing after this video that maybe I don't want to keep contributing to those investment accounts because of the things that we just chatted about. Here's what I would do. The first thing I would do is I'd open up a whole life insurance policy with a mutual company that gives out dividends. Let me explain. The reason being is because your premium contributions, this case the $10,000, will be safe and secure and earning. Yes, I said it. Let me break it down for you. You will not lose that $10,000. You will have it for the remainder of your life until you decide that it's more beneficial to you to take it and use it. While, of course, the whole time it's safe and secure. It will be earning money. The insurance companies guarantee it. No, like seriously, it's in the document. Guaranteed earnings. Secondly, and most importantly, While it's earning, the insurance company will also offer you cash value, which is just a fancy name for a different pool of money that you can take and use at your leisure to do anything that you might want to do. Now, I'm not going to suggest that you take their cash value and give it to the government in those government-sponsored plans. But I might suggest that you take the cash value and pay off your debts. Or you take that cash value and you do investments that can make you more interest. Because the way I look at it, if you've got guarantees on the original principal, your dollars of $10,000, and the ability to take different money that the insurance company calls cash value and go pay something off or go make more money with it, haven't I just effectively gotten double the use out of my money above and beyond what someone on the internet or Investopedia might suggest? Or above and beyond what your friends or colleagues might suggest? It's amazing to me how far ahead a person can get being able to save money and spend money at the exact same time. And that's what we teach people here at the Cash Compound. It's called our save and spend system. And that's the first thing that I think you should do if you've got $10,000 in your savings account. Then after that, you can do anything you want with the cash value. It's a different pool of money that the insurance company gives you, although I probably still wouldn't suggest that you use those government-sponsored plans. You can learn more by following us right here at the Cash Compound. My name's Jonah, and this is just another day in the office.